Despite the wreckage, one of Wall Street's biggest crypto bulls has a message for investors. Keep calm and hodl on. Tom Lee of Fundstrat joins us now. Tom, great to have you with us.
Yeah, thanks for having me.
You know, when we put out there on Twitter that you're going to come on, we got a little bit of flack out there because you just come on and say, buy Bitcoin, keep holding, keep holding, keep holding, or hodling, whatever you want to call it. But your premise of buying it and holding it is backed up, you say, by numbers, by data.
Yes. So it's a simple exercise. You know, people have done it for equities for a long time. But if you take out the 10 best days for Bitcoin every year based on percentage change, Bitcoin's fallen 25% a year. So in other words, the gains in Bitcoin occur in a very short number of days. And even last year, for instance, if you exclude the 10 best days, Bitcoin was only up 200%. So in other words, that whole 1,600% move was actually concentrated in a handful of days.
How confident are you that historical data holds for an asset like Bitcoin when the liquidity has changed so dramatically over the course of this many years? And
I mean, it's a fair question. You know, this idea of avoiding market timing, really that's why you want to make sure you capture the 10 best days, is really worked in a lot of liquid markets for years, right? For S&P, it's really been since 1954. And in Bitcoin, there's consistency. So it's not as if when you look at the history of Bitcoin that there's a few years where this is the case. It's really occurred in every single year.
But Tom, if I was holding an S&P, a Spider, or something, I want to not miss. I want to just be there for the ride. I think one of the concerns here is that Bitcoin, you know, even if you're in those days, you have to believe you're going to have those days again. Obviously, there's still a very existential question about Bitcoin's viability. Maybe not crypto as an asset class, but is Bitcoin the player? I mean, we don't know that, and that's for guys that are in this asset. This pain is something that says, by staying in it, I could be in the 10 worst days of 2018 and be much worse off.
Yeah. Well, I mean, the mood in crypto is terrible right now. So, I mean, I think long-term holders are worried because they have big gains and they're worried about falling prices. But Bitcoin is a great store of value. It works really well. It's kind of boring because it's not like the latest and most exciting project. But it also is one of the most liquid ways to get exposure to crypto. I mean, there's a lot of on-ramps being built from, you know, futures and I think potential ETFs, and it's probably the clearest from a regulatory perspective. So I think when institutions start to really get involved, and they aren't in a big way, Bitcoin's going to be one of the first places they start.
The price of Bitcoin started sideways-ish. Is your misery index unmiserizing? In other words, as we go sideways, are people feeling a little bit better about things, which implies you could see another move lower if that's the case.
Yeah, so the misery index is still low. It's around 28, which is a level of misery. You guys have better graphics again on that. So I don't think anyone who owns crypto should feel confident. But, you know, we still think Bitcoin's in a bull market. So I don't think we have the conditions that took place in 2014, which was a huge liquidity shock, right? I mean, you had the largest exchange announce a massive hack. I mean, that's not the type of seismic event taking place in crypto today.
Is crypto, is this call and your calls around Bitcoin these days, are they the hardest to defend out there? I mean, you've done a lot of good work on stocks. You've been a strategist on the street, well-known, well-regarded. And here you are talking about Bitcoin in what has been a terrible market for Bitcoin. Do you feel like when we talk about institutions coming in, is this harming that move or what you see coming?
It's so it's kind of a mixed blessing. One, it reminds me a lot of my work when I was a wireless analyst in the 90s, you know, where people thought it was all about long distance and plain old telephone service, and people thought cellular was this crappy little capital-intensive business, which now is bigger than everything. But, you know, we're doing a lot of calls and meetings with traditional managers. They're taking this chance for while Bitcoin's consolidating, and they're seeing the case for it as a real store value, and there's real plumbing being built to get educated. So I think this is actually great timing because it doesn't force investors to jump in and then learn later. It's giving a chance to really study this. So as bad as it feels now, I think it's actually the kind of environment you want.
Last quick question, right here, right now. Fresh money into Bitcoin or the S&P 500?
If it's between now and year end,
yes,
it's easily Bitcoin. But we are bullish on equities. It's just I think Bitcoin has a lot more upside.
Okay. Tom, good to see you. Thank you.
Great.
Tom
Thanks,
Lee.
guys.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.